friends, welcome back to the Girl on Fire podcast. In this episode, we're going to be talking about a question that all new investors have when it comes to the stock market. How much do you need to start investing in stocks? There's a lot of misconception about how much you actually need to be able to start investing in stock markets. A lot of people think you need to have thousands and thousands of dollars just to get started, and that just isn't the case. To trade stocks, you need a broker. They execute the trades and they don't do it for free. So before you even think about which stocks and securities you want to invest in, you need to choose a broker. In last week's episode, we went over the different types of brokers and what to look for when you're choosing one. If you haven't listened to that episode yet, I highly recommend you go back and listen to that one first so that you're all caught up with what we're talking about. You shouldn't decide on a broker based on cost alone. There are 6 other things you need to consider, so make sure you listen to last week's episode as well. In this episode, we're going to dig into the costs and the risks for some of the different brokerage options in Australia, and I'll leave everything linked in the show notes as always. Now, why is the cost so important? Because this is the cost of investing. So the more affordable it is, the more of your money actually gets invested as opposed to paying for the brokerage. When you're comparing brokerages based on cost, there are a few factors you need to consider. The first factor, some brokers require you to invest a minimum amount per trade. If you can't make that minimum, you can't trade with them. The second factor, all brokers require some form of brokerage fee for executing the trade. This is often a flat fee, but may also include a commission you pay to the broker as a percentage of your trade value, and sometimes even a percentage of your returns. The third factor, ongoing fees. Monthly account and administrative fees are a bit less common now, but they've been replaced by membership fees for premium services. Keep in mind that these costs we're going to talk about today are entirely independent of the amount you're actually investing. So if you have $100 to invest, you either have to pay for these fees in addition to your $100 investment, or it's deducted from your investment. Think of these fees as the entrance fees into stock market investing. Anything you have in excess of these fees can be invested. That's why we look at these costs when you're figuring out how much you need to get started. Because what you need to get started will vary depending on which option you choose. At the same time though, it's super important to recognize that the cheapest platform is not always the best. There are a few other things you need to consider when evaluating the risks of choosing one broker over another. Cheaper could mean lower quality or cutting corners. Let's explore these issues in detail with the brokerage options we discussed in last week's episode. First up, we have CommSec. CommSec is the brokerage platform offered by the Commonwealth Bank. It's probably the most established, trusted, and well-known brokerage platform in Australia. They've been around for about 20 years or so. It's pretty popular with older investors or people who've been investing for a really long time because there was a time when it was pretty much the only option. It's an online broker, but I'd call them a full-service broker. They provide live data and allow you to trade, but they also give stock recommendations and personalized watch lists of stocks to consider. It's free to sign up if you want to take a look around, but it's actually one of the most expensive options. Here are some quick facts you need to know about CommSec. They have a minimum trade value of $500, so you need to be able to invest at least $500 to trade with CommSec. They charge a $10 brokerage fee for trades under $1,000. If you invest over $1,000 in one trade, then you'll pay a $30 brokerage fee if you use your own bank account, and $20 if you use their special bank account. Depending on how much you invest, you could also be paying a commission between 0.12 and 0.31% per trade. CommSec trades are CHESS sponsored, which is something we talked about in last week's episode. It means that you actually own the shares and they're not owned by someone else on your behalf. They're registered to you under your holder identification number, your HIN, and the ASX knows who owns what. Now, without including the commission, all of this means you need at least $510 to get started. Because of these high brokerage charges and commissions, I actually don't recommend CommSec. The first time I ever made a trade was when I turned 18, and I used CommSec because it was really the only option. But now it's not, and I'm more interested in a cost-effective option that won't eat away at my money. That's why I personally use SelfWealth. This is totally not sponsored, although if they want to sponsor me, I certainly won't say no. SelfWealth is probably the biggest competitor that's really giving CommSec a run for their money. They've been winning awards in recent years for being the best and most affordable broker. Here's some quick facts you need to know about SelfWealth. There's no minimum investment amount required, so you can start investing with pretty small amounts. You'll pay brokerage fees of $9.50 per trade, regardless of the value of your trade. You also don't pay any commissions or account fees. There are no monthly fees to use SelfWealth, but they do offer a monthly subscription for $20. The subscription gives you more detailed reporting and analysis and lets you sticky beak into other people's portfolios to see what they're holding. All trades are CHESS sponsored, which means you actually own the shares. This means that the cost to get started with SelfWealth is as low as $9.50. I find that pretty amazing. It's truly making investing accessible to everyone. That's why I've chosen SelfWealth. I don't pay high brokerage or commissions, and I get access to all the information I need. I actually don't pay for the premium services that are available under the monthly membership. I'm not against it, but it's just not something that I need right now. You can also refer your friends to SelfWealth and get some free trades when you sign up. You get free trades, they get free trades, everyone's happy. So if you're interested in SelfWealth, I would love it if you'd use my referral link in the show notes. Again, totally not sponsored. I just really think that they're the best options for Australians looking to invest in the stock market. So when SelfWealth splashed onto the scene, they really shook things up. CommSec was no longer the only game in town. There was a much cheaper option available that was offering super high quality. CommSec then introduces a CommSec Pocket. I guess it's their answer to a low-cost, high-quality brokerage. Here's some quick facts you need to know about CommSec Pocket. There's a minimum investment of $50 required. It's significantly lower than regular CommSec, but still not as low as SelfWealth. There are no monthly account fees or memberships. You'll pay $2 brokerage per trade for trades up to $1,000. If your trade is over $1,000 in value, you'll pay a commission of 0.2%. This means that the cost to start investing in the market with CommSec Pocket is $52. However, there's one super important thing to note with CommSec Pocket. You don't get to choose what to invest in. Your choices are limited to 7 pre-mixed investment options consisting of ETFs. That means you don't have a lot of visibility or control over your investments. My guess is that this is their way to get people interested in investing so that if they ever want to choose what to invest in, they'll choose CommSec. This is CommSec's way of making investing more affordable and accessible. But I really think it's important to learn about investing and to have complete control and transparency over what you're putting your money into. Let's take a quick break to talk about my amazing sponsors. This episode is brought to you by my patrons. Their support allows me to create really awesome podcasts every week. My patrons get amazing benefits for supporting this show, like branded merch, my investment and FIRE calculator spreadsheet, digital goodies, and a chance to chat with me one-on-one. If you'd like to show your support by becoming a patron, just click the link in the show notes. Another newcomer to the scene is Superhero. They're an online broker that has those ads about giving CommSec a kick up the ASX, and that always makes me giggle. I think it's hilarious. But here's the quick facts you need to know about Superhero. They have a $100 minimum investment to get started. You'll pay a $5 brokerage fee for ASX listed shares and no commissions. They have an optional membership for $9 per month, which is actually free until the end of June in 2021. You need the membership to have access to live market data, which I think is so important that I personally would not go without it. That means you need at least $114 to start trading with Superhero. I'm including the membership in the minimum cost because live data is just too important to not have access to. But the most important thing to know about Superhero is that all trades are executed under the Superhero HIN. Again, the HIN is the holder identification number. So normally when you trade CHESS-sponsored securities, those securities are registered to you under your HIN. That's how the ASX knows who owns what. Superhero doesn't issue HINs to its users in order for them to make investments. all trades are executed under their own HIN. This means that as far as the ASX is concerned, Superhero owns its shares and you don't own anything. Superhero keeps their own list of who owns what. That's one of the ways they're able to keep their costs so low. Now, in last week's episode, we talked about making sure that you're 100% comfortable with whoever you're giving your money to. It's hard to say what will happen if Superhero or any of the companies you're indirectly invested in go under, because technically, you don't own any shares. Superhero does. They do have an AFSL, which means they are governed by ASIC, and that does provide some comfort, but I personally am not going to be putting thousands of my hard-earned dollars into stock market investing where I don't actually own anything. The last option I wanted to cover today is Raiz, which used to be called Acorns. They're a micro-investing platform, and their goal is to really normalize investing small amounts. It's an app that you download and you link all your cards and bank accounts to. They take roundups from your purchases and invest it for you. So if you spent $3.80 on a coffee, Raiz would round it up to $4 and take the additional 20 cents to invest it for you. Here's the quick facts you need to know about Raiz. There is a minimum investment of $5. So once the value of all your roundups equals $5, your money can be invested. If the balance of your account is less than $10,000, you'll pay $2.50 per month. That's $30 a year for account fees. If your account balance is over $10,000, then you'll pay 0.275% per year in maintenance fees. This means that Raiz actually has the lowest entrance fee, so to speak, of $7.50. However, there are some super important things you need to know about Raiz, and in my opinion, there are actually major issues. First, this model of micro-investing means that your investments aren't CHESS-sponsored. You don't own anything. Raiz will pool money from all the people using its platform and then go and trade on the market. It then allocates the returns from those trades proportionally across the investors using the platform. That's how you can invest such tiny amounts, because you're not buying anything in full. And because you don't own any shares, you don't have any shareholder rights. Raiz owns the shares for you in a custodial relationship. Another thing that's really problematic with Raiz is that they push third parties like FlexiCards at you. They even acknowledge that these third parties might sell you credit. Raiz has an agreement with them to use your funds to pay your obligations. I actually think that's really predatory and not putting you in the best place to grow your wealth. So these are just a few of the options out there. I strongly encourage you to do your own research and find the best fit for you. It's super important that you understand not only the costs involved, but also the risks of these different structures and business models. If you only remember one thing from this episode, let it be this. Do not give your money to anyone you don't trust 100%. You worked really hard to earn that money, and then you had to make the sacrifices in order to save that money and invest it. As I mentioned, I personally choose SelfWealth. I'll leave my referral code linked in the show notes if you want to give them a try. When you use my link, you get free trades and I get free trades, and it's at no extra cost to you. Totally not sponsored, I just really love them. And that's all I have for you girls on fire today. On next week's episode, we're talking about how to set investment goals and why you need them. This is something that trips up a lot of new investors. It's going to be super interesting, so you're definitely not going to want to miss it. I'd love it if you would please rate and review this podcast on iTunes. It's a small effort on your part that really helps me out. I don't want you to miss any future episodes, so be sure to subscribe on Apple Podcasts or anywhere you get your podcasts. If you found this episode interesting or helpful, then please share it with someone who you think would enjoy it too. As always, a massive thank you to my patrons for supporting this show. Their support makes it possible for me to create and share this content and grow this podcast. If you want to support the Girl on Fire podcast, head to Patreon and become a patron. All the links are in the show notes. My patrons get amazing benefits for supporting this show, like branded merch, my investment and fire calculator spreadsheet, digital goodies, and a chance to chat with me one-on-one. There are a number of tiers you can join, or you can pledge a custom amount that suits you. Thanks for listening, and I'll chat to you in the next one. Bye!